Welcome to another Saturday night live stream. Tonight, my special guest is Hi Rye from the Hi Rye channel. Tonight, we're going to be talking about fundamental analysis, and we're also going to be answering all of the questions that you guys have about fundamental analysis or investing in general, of course. So, before we get too deep into the content, very quickly, Rye, how are you?
I am good, enjoying my weekend, rocking and rolling. How about you?
Oh, it's a fantastic day. We got the new studio all set up, and we're all ready to rock and roll.
Nice.
All right. To start off with, I just want to sort of talk a little bit. One of the things I find with new investors is when they come into the market, they just don't have a clue how to invest. Half of the time, they're going on YouTube and they're basically taking the advice of anybody who's willing to give it. And that is really not a great way to invest. It's not a great way to learn the market, and it is a good way to make a lot of mistakes. So that's kind of the idea behind this, is just talk a little bit about those simple things that you should be doing when it comes to fundamental analysis. Fundamental analysis means looking at the company, looking at their statistics, looking at their earnings, things like along that line, opposed to sort of staring at the charts and trying to figure out where the lines are going. That's what you would call technical analysis. So they're two completely different schools. Old school investing was all fundamental analysis. Technical analysis it's been around, but it hasn't grown into popularity until the last few decades. It's really gotten popular, and now today it's pretty darn popular. But sometimes it's best to go back to the basics, understand the basics, and then you're ready to move into the future, and you're able to sort of figure out what's going on with the companies that you're holding and whether or not they're safe to be in your portfolio.
Very well said.
I know I barely got to breathe in that one.
Nailed it. 2 minutes.
Bang! Everybody now you know. No. Um, so we'll start off with something very, very simple. We'll start off with something called price to earnings. So price to earnings, is otherwise known as your PE ratio. Basically, what that is it's a ratio that will give you a good understanding of if the company is making money, because that's kind of very, very important. So when you take a look at the earnings per share, for example, you'll need that to sort of work out the P slash E. So your earnings per share, that's how much money each share is making. One big thing when I go looking at a stock is if that number's negative, that stock's not going in my portfolio. It's just, it doesn't belong in my portfolio. So I'm looking for a healthy number there. It doesn't have to be like 100 or something crazy like that, but I want to see something at least one or above for me to even want to take a second look at them.
Well, if you look at a PE ratio can be another indicator though too for intensely overvalued stocks. Like if you had a PE ratio that was 100 versus a company that was a 5, that could indicate right there that at least just based on earnings, one's a better bargain, or so to speak, right? I mean, that's why Tesla PE ratio, climbed down to I think 180 now, because it's better bang for your buck now as opposed to where it was 360. But so you're looking for high PE ratios when you're buying stocks?
I'm not looking for super high. I'm
Like
looking
anything
for,
above 30 freaks me out usually.
yeah, I normally will look for, I would say my idea is 5 to 15 in that zone tends to be my ideal.
Yeah.
Yeah, you're right. When it gets a little bit too high, then you're looking at most likely they're overvalued, and that can be trouble for you down the road. So if you had bought, as Ryan said, if you'd bought Tesla when they were up in the 300s, right now you'd be looking at a lot of red in your portfolio from them.
Well, I mean, this is the thing though. Tesla, when it was at the 300s, was at like $400. So you're still way up. But if you've got that super high PE ratio, basically what that tells you is you're almost pricing in exceptional growth in the upcoming quarters and years. And then it's up to the management team. Are they going to be able to actually satisfy this intense growth before, the price goes in the other direction kind of thing? And Tesla's one of those unique companies that if it was anyone but Elon Musk, like you would have seen a correction long time ago. But
Yeah,
I don't know.
I mean, and Elon has even tried to create corrections.
I know. Yeah.
And that's the funny thing. Not many CEOs are out there saying, "Yeah, my company's worth too much. I'm going to see what I can do to knock that down a bit." but he tries, which is kind of good. And what we'll do now is, just before we get in deeper in this, I'll just give a couple of hellos to the people who are in the chat. So we got the friggin' Oracle, Ola, and we got Riley Mack. Hi, Riley. And Teach Me Teacher. That's a song. I remember that. I don't know who it was by, but Bleak, hey. And Jill, hey. And Christine, hi. And we got Sandra B, who is waving. Perfect. And before we get back in, we also have Sakanaham. Hi. I hope I said your name correctly. Oh, and we can't forget about SM Diecast, our young, soon-to-be probably a millionaire, the way he's going. I love that kid. He's just awesome.
Mm-hmm.
All right. And Dan. Dan sort of snuck in.
Hey, Dan.
All right. So we were talking a tiny bit about price to earnings. Now, have you ever looked at price to earnings growth, so the PEG ratio?
That's not one that I have. So you go into that one. I've heard of PEG and I don't track it myself. So I'll just break this down, because I think the way that we, I think, are looking at I think you're more quantitative or fundamental analysis, and then the qualitative side's where I'm all at, where I'm reading the news, and that's why I get off on the market close live streams and stuff like that. For instance, and I don't even usually look at the income statement. I just usually focus on the balance sheet and then cash flow, and then go pure qualitative on that side. But as for getting quantitative and then tracking like the PEG, no. So You're going to have to tell me on that one.
That's fair. Basically, what you're looking at with the PEG ratio is it's your price to earnings, but you're also looking at the future expectations of the company, and you're sort of comparing the two of them, and that will create what's called a PEG ratio. So that will sort of give you an idea whether the company is expected to grow or not. But at the same time, now what Ryan was just saying about the news, that is something you absolutely want to be doing. You want to be following them. Even if it's a company that you're really interested in investing in, it doesn't even hurt to set up news alerts on them. Find out exactly what's going on.
Honestly, great point. Before we get off this topic, in case anyone wants to have that set up, the easiest resource I've found that you guys can do right now, it's totally free. Go set up your own personal watch list on Yahoo Finance, so that when you do have that set up, it will send you alerts, all of the news alerts for these for the stocks. Investing.com is not as clear. I find Yahoo Finance just it's incredible. Anyway, sorry, Candace, just wanted to throw that in there.
Oh, no, absolutely. No, that's a really good resource. It's one of the things I do like about what Yahoo Finance is, when you go to any one of your tickers, it will have all of your news pretty much right underneath of it. You can find out pretty much what's going on. The other thing too, don't be shy to bookmark the actual company site. They do have an investor page. Sometimes it lets you know about things that are happening. That is probably not as useful when it comes to actual investing, but sometimes it keeps you abreast of things that are happening, things that might make you excited, may think you that it's time to perhaps increase your investment. Or in some cases, it may let you know of just some events coming up. And I think that's where that whole EIT debacle started, is with their press release. And that went widespread. And of course, I did a video about that already. So if you haven't seen that, go check that one out. But that's sometimes what happens. A lot of times they are pretty clear on their website of what's going on. Sometimes they're not. The news, though, tends to be a better resource when it comes to this. BNN is also another good resource. If you ever go to, they have a website. They've also got, are you subscribed to the BNN live screen?
Me?
Yeah.
I'm not subscribed to BNN, the pro version. I'm not on the pro. I'm on CNBC Pro, but not BNN Pro.
Okay.
No, not BNN. Part of the reason is I can't put the videos up for the crew. So that's why I stick to CNBC, but
yeah, that makes sense. I do subscribe to BNN. They have a pretty good show. They do a lot of great analysis. And for people at home who aren't putting them up on the screen for other people to watch, it's another good resource. Now, you might be able to even get that with your basic cable packages, or at least as an add-on. I'm not entirely sure. I kind of live off of the cable and doing everything through the internet myself. But that's another option too. Just the more information you can get, the better off you're going to be. Here's another great tip I have. If you're uncertain about a trade, then don't make it. Simple as that.
There, yeah.
So I've seen so many people, they go in blindly. It's almost like they're using the force, but really, if you have any doubts, then stand back. That means do more research, do more of your due diligence, find out whatever it is that's bothering you about that company, find out whether that is a concern or if it isn't a concern, because your own fears can sometimes be your worst enemy, but they can also help you and save you from making dumb mistakes.
Yes. Big time. I did make a comment. It's not showing up on the StreamYard part, but the news is great. But oftentimes, unless it's a big mover, it's not every minute little detail and this and that. But if I'm really into a company, there's only a handful I've actually used this for, but if I'm really into one, you can go to cedar.com. I put this in the live chat on YouTube so you guys can see it. You can go to cedar.com and you can look up literally every single filing. So even for swaps and manage anything, right? So that's a good resource if you want to go really deep and that deep, I guess.
Yeah, that makes sense. Gary's in the house, by the way.
What's up, Gary?
And Dan loves Yahoo Finance. I love Yahoo Finance for a lot of different reasons, but I also dislike it at the same time. One of the reasons I dislike it is sometimes, especially when you're doing their charting, their charts will sometimes just go really wonky that you have to log out and log back into the chart to get it to work again. That's what kind of annoys me, but I do like their background and their ease of use. But one other thing I don't like, and this is kind of a technical analysis thing, but I'll mention it, is it won't let me draw just a straight line the exact distance I want. So when I create lines, it has to go pretty much infinity both ways. So sometimes that can, make your charts look a little bit not as neat. A lot of times when I was using Yahoo Finance just to put some technical analysis up, I'd actually have to take my screenshot, take it over to Photoshop, and get rid of some of the extra lines because of that. But when it comes to just the news they bring, I think they're fantastic that way. And if you're not doing technical analysis, then I think their chart is absolutely beautiful. It lets you, well, there is one other small thing with technical analysis. When you put lines in and then you start changing your candle dates. So if you put lines in at, let's say, the 4 hour, and then you go to the 1 day, sometimes them lines can be doing some really funky things on the larger scales because they just don't translate across the different sizes as well. So that's another little thing that I dislike about them. But other than that, I think that they're a fantastic company. And we have, so hit like, and we got Redbeard in the house. Hey, Redbeard, how are you tonight? Perfect. All right, so that's the whole idea. The big thing is to just sort of keep your mind open. Really, what are candles? Okay. And Jill is asking, what are candles? All right. There's different ways you can view a chart. There's a line chart, which is just a straight line that you're probably used to from math class. Then there's candles. So a candle gives you a little bit more information. So basically, when you enter into a time frame, so let's say you're doing 4-hour charts. So each candle will represent 4 hours of time in that movement. The very top of the candle is the highest price it ever reached in that 4 hours. The bottom of the candle, and these will be either, they might be wicks or they may not be, would be the lowest price they reached in that 4 hours. Then the solid body in between shows you the actual movement within there. So for example, if you came across, and this is really hard to do with just this, but if you came across about here and the price went up, and then it went back down, but it went back up again, all in that 4-hour time frame, you're going to have like a wick that goes below where it entered. And then from where it entered, you're going to have a green solid body that goes up to where it closed. Now it did go a little higher, and there'd be a little wick going up. So it shows you the whole range of movement in that period of time. And from that, it really sort of gives you an idea of the momentum of the way that the buying and selling pressure have been acting together. Hopefully that answers it. I will actually do a video. I think in February, I'm looking to do a sort of a beginning technical analysis video for the channel, and that will cover. It's probably going to cover candlesticks and charting basic highs and lows for resistances and supports. So I hope that does it for you. All right, and Daryl's in. Hey, Daryl. Now, Daryl, interestingly enough, I know Daryl has been talking to me that he's a little concerned about the oil sector, and I've been sort of letting him know that the oil sector is looking really, really good. So just give me 1 second. I am blocking a bot because we have a bot-free policy in here. So Daryl's been talking a little bit. He's been a little concerned with the oil sector and the energy sector, and I've been telling Daryl that, in my opinion, as a non-financial advisor, but somebody who follows the market as much as I do, the energy sector is absolutely one of the better sectors. I think one of the safer sectors for 2022. So anybody who is concerned with oil, just look at what's happened in the last couple of weeks with all of the red that we've had in the market. Oil has not reacted as badly as pretty much every other sector. In some cases, like right now, my XEG, which is a oil ETF that I invest in, they recovered really fast, and they're already doing nicely in the green. And oil and the whole energy sector itself, I think, has just been recovering really fast. So Daryl, don't be concerned about oil, at least not 2022 and probably 2023. But you want to reevaluate that, and always reevaluate everything. For example, if a war breaks out between, the U.S. and Russia, then everything may very well change. We just don't know. That's what we call a black swan event. But going with the way things are going right now, it all looks good.
I love oil.
I know, oil is great.
I've been making money on oil for a few months now. And this is the thing. Spring is going to bring a lot of good news for oil. I mean, with respect to it being 2022, what's, going on with respect to maybe opening things back up, airlines, you name it. Then there are the tensions again with Russia and Ukraine. Yeah, not to mention, if I don't remember what the title of the video was, so I can't even mention it, but there was a statistic I once brought up, and energy and oil stocks are some of the best plays going back all the way to the 60s in times of ridiculously high inflation, which is what we have right now anyway. I'm on energy all day, every day. Certain picks, though, I don't like. I mean, I don't want to bring up the stocks I'm not into that are some fan favorites, but there are some serious rock stars. Like he's saying, dividend aristocrats, defensive plays are fine and are okay in oil too. I know that you're pretty much, there's clean energy options that are so well diversified here in Canada. I don't know. Your options are endless for energy. I get it though, because it's just oil and energy can be pretty volatile. Like look at natural gas over the last little while. It can be a little volatile.
Yeah. And also keep in mind too, a lot of the Canadian oil companies, they are starting to look into renewables, whether it be natural gas or whether it be, we'll take Fortis. Fortis is a oil company based out of St. John's, Newfoundland. They have their fingers pretty much right across North America, and they have a strong renewable energy sector that they have been sort of building because they're sort of looking into the long-term future. So that's what I like about the Canadian oil sector is that, they're not just sort of sitting here and saying, well, we're going to play the oil game until it runs out, whenever that may actually be. They're looking to the future. They're putting the infrastructure in place. They're going to be in good shape. If we ever do get to that point where oil starts to run out and the world wants to move to renewables completely, these guys have got themselves already set up. They're preparing for that. They're going to remain profitable. So that's why I love that sector. And Daryl has Imperial Oil. I don't own any Imperial Oil, Daryl. I'll just be upfront with you on that. So I don't know a lot. I haven't researched them very, very well. Just a little bit. I know I did a video and I think I did mention Imperial Oil in that video. Their initial stats did look pretty good though. But at the same time, you know what? That's what this show is all about. It's just using your head, looking at the company. One good metric for a company is just looking at their earnings. Have they been earning consistently for the last 5 years? If they have, well, it's going to take something major to make that change because they've already demonstrated they've got the good company, they've got a good management, they know what they're doing, and they're moving in the right direction. And the same thing when you're looking towards dividend stocks. Have they been increasing their dividends every year for the last 5 years? Obviously, what SM mentioned about dividend aristocrats, if they're an aristocrat, you know they've been increasing their dividends for quite a few years in a row. So they become very safe bets. That's one of the reasons that we like to call them blue chip. And speaking of SM, I've made like 200% in like a month, but I usually try to stay out of penny oil stocks. Absolutely. Penny
stock.
Yeah. And here's the thing, when you're looking for stability, you're not going to find it in penny stocks. And I also say be kind of cautious with low cap stocks too. So you want to kind of avoid penny, avoid low stock. Or if you do want to play with some of them, play with money that you can afford to lose. And I'll always say with a low stock, with a low cap, for example, you want to be paying attention. When we mention keeping track of the news, you don't want to miss a single news article on a company, especially if you've got a lot of money tied up in them, because you want to be able to be as agile as possible in case things do go the wrong way. And SM, speaking of Fortis, they just said they want to move to 100% renewable natural gas in the next few decades. So I've been trying to find some plays that could benefit. And that's exactly what I was mentioning. They are making the moves towards renewable. And, here they say the next few decades. Yeah, that's probably the right time amount. We can't just sort of turn off the switch on oil and move instantly 100% into renewables at this moment. It's just not possible. And that's one of the reasons that oil is going to be around for a long time and it's going to be profitable for a long time. This is slowly turning into an oil stream, Ryan.
Your crowd likes oil, I guess. Well, no, what did it start with? Oh, Daryl. Yeah.
Yeah, because I've been talking to Daryl on the thing. Here's that other thing, guys. If you guys are not yet on the Mountain Finance Facebook page, definitely jump in there, join it, and when you have questions, post them. Usually it's me. I'm there a lot, so I will jump on your answer and give you any information that you need. If I'm not available, there's a lot of awesome people in the community already who will help you out. And especially, you know what? Here's that thing. Remember when I mentioned if you're not 100% sure about jumping in on a stock, come on over. Maybe you could always throw some information. You could just say, hey, what has anybody been involved with this stock? What's been your experience? Don't base your decision on that, obviously, because you still want to use your own due diligence. But sometimes it can give you, if you've had a bad feeling and a couple of other people say, yeah, I kind of got burnt with that stock, then maybe your bad feeling is legitimate. So that's kind of one of the neat little things that I think you can do over on the community. And Daryl is, I'm new. Perfect. And that's what we cater to. We cater to the new folks, Daryl. So don't be afraid to ask questions. I know people say the only dumb questions are the ones not asked. There are really dumb questions that can get asked too, and I don't mind them as well. But honestly, jump on, do everything that you utilize our resources. And Ryan has a great channel too, and he has an army of people willing to help too. So there's a lot of help out there for you, and we're not going to leave anyone behind. But you have the ability to leave yourself behind. So think of it that way. And SM said, is there an Instagram account too? I have that. I do have Instagram. I haven't been doing a lot with it yet. But you know what, SM, I will change that. Now, I do have a Twitter as well. And I will make sure that my links to both of those, I will put them in the notes down below. I think they're there, but I'm not 100% sure about the Instagram one. And Daryl, can I show you my portfolio so far? Well, I don't want to see your portfolio like directly. But like I said, we can give you the key information so that you can make the right decisions for it. And part of that is just, it's kind of like the law. Because we're not financial advisors, we can't sort of say, okay, buy this stock, buy that stock, buy that stock. But we can certainly tell you which sectors are doing good. We can give you some ideas that will basically start your research. We're sort of like that foundation you start off on. I always say in my videos, we're the beginning, your financial advisor is your end. But ask as many questions as you want, and we will definitely do what we can to provide you with some answers without breaking any laws, for example.
Fahad had a good question, actually.
Okay.
Or we'll get to it. Yeah, never mind. 1 second.
All right, Fahad, we're coming right to you. I have about 130K in the market as of 2 weeks ago. That's a pretty good portfolio, Daryl. So you definitely want to be in learn mode. And I'm mad I missed out a past few years. Here's a big tip before we get to Fahad, who's next. Never beat in investing. You're going to make bad moves. Everybody will. I make them. Ryan makes them. It happens. You just don't beat yourself up about it, because nobody's 100%. Even the best traders out there are probably about 85% right. 15% of the time they're making them bad moves. But what happens is sometimes with new traders is if you come in and you make one of these bad moves and you get burned, sometimes it can completely turn you off. It can affect your next string of trades to the point that you're not even thinking straight, and you start making mistake after mistake. So one of the things in trading, learn to not beat yourself up, learn to forgive yourself, just move on. Think of it as a learning lesson each time. Okay, Fahad. Why would payout exceed 100%? Example, Enbridge.
It's not always like that, but when their dividends are exceeding their earnings, or what their earnings can support, so it's obviously not sustainable. So their earnings need to come up, is what that's telling you, so that we can obviously maintain the dividend. But it's not necessarily the greatest thing ever when payout exceeds 100%. I'll tell you that much.
Yeah, and sometimes you will actually find this during the bad years. We'll use Fortis, for example. There have been a few years where they have paid out their dividends, even though their earnings didn't support them, and increased their dividends at the same time because they wanted to keep their aristocrat status. And they're about a year and a half roughly from becoming a dividend king. So that's kind of cool. Right now, Canada does not have any dividend kings. Canadian Utilities, about a year, they'll be a dividend king, then Fortis right after that, and then we'll have some, which is kind of cool. And just to be clear, for a dividend king, you have to increase your dividends for 50 years in a row. That's insane. But if a company is that close, you're probably knowing that if you're a dividend investor, they're a very safe bet for your portfolio. I have 3 Airbnbs, but
That's awesome.
they're great sources of income. Yeah, absolutely. And that's the whole thing with diversification. If you can diversify outside of stocks in addition to just your stocks, that really sets you up for success. Real estate, B&Bs, those are all really, really good investments. Overpaying on dividends, not sustainable. And this was Ryan. Okay. What do you think about banking sector right now? Well, Sandra, I'm going to be giving a lot of information on what I think about the banking sector on Monday, because that is my next video. I did the oil sector last. I'm going to do the banking sector next. But in a nutshell, right now, the banks have been making record profits throughout the illness. They've recently increased their dividends. Pretty much all 6 of the big major ones have increased their dividends. I've even seen a few of the Class B banks start to do that too. So one of the interesting things too is they're also planning share buybacks. So that will cause your shares, if you have any, to actually increase in value, because if you think about the relationship between share price, market cap, when they buy back and absorb in some shares, the math basically forces the price a little bit higher on the shares. So right now they're a solid investment. I'll certainly give you more on Monday on that one. Hello, Alex. How are you today? Oh, SM, I'll get you in a second. There is a bot underneath you, and you probably don't feel too comfortable about that. Let me get rid of that bot. Okay. And this is what I say to the bot. You are not welcome. I speak in their own language. So now imagine buying a Dividend Kings at IPO. That would have been crazy. Yeah, absolutely. I mean, there's a lot of companies that if you think about, I mean, every company at one point had an IPO. Think of all the big companies today, the people who did get in on the IPO. Well, take Microsoft, for example. When Microsoft, when they IPO'd, they were giving stocks away to their own employees. There were janitors at Microsoft who are now multimillionaires because of the stocks they were given. So, yeah, an IPO. And here's the thing, though. Normally, if you look at the way an IPO happens, the price will tend to go up really fast right away, and then it will drop down. A lot of times it'll drop down lower than what you bought in if you bought immediately, and then it will take a while. So one of the things I usually do with an IPO is I'm not going to be there when the bell rings to buy that IPO because I know how most of them go, and I'm going to wait until it falls back down after all of the hoopla, because you got to realize that a lot of times these companies have given stocks to some of their employees, and they're just waiting for that because then these employees are selling stocks, and there's a lot of
Like
selling that happens.
every IPO in 2021, literally, like every single one of them, up and down,
Oh yeah,
every single
absolutely.
one.
So be careful with IPOs. I usually say, maybe if you want to get in, give it a couple of months.
Or you know what though, too, because who the hell are we to say that we're saying this because of we're thinking about buy opportunities, but in some sense that's kind of trying to time the price of it, right? So I mean, if you really do believe on a long, decades long, you're a bag holder kind of vibe, then there's no one that's going to tell you it's under, you know what I mean, that the price even matters right now.
Yeah,
But
exactly. I mean, right
still,
now, what we both just said is absolutely wrong if we were talking about Microsoft in their early days. So keep that in mind. If you do have that confidence, then yeah, as Ryan says, absolutely. Hi, Journey. How are you? Sandra says, cool. And Jill says, Rye, what on a company's
this
balance?
is super easy. I'm going to make a video about the balance sheet because this is the perfect beginner video for everybody. But the whole balance sheet. So there's not anything in particular that I do right off the bat. I'll tell you though, I divide the total assets by total liabilities right off the bat just to get a number above 2.5, just to show a little bit of strength. Anything above 2.5, obviously we're looking at the Googles and Apples, whatever, right? But that's what we're looking at right there. If anyone's wondering, so current assets are obviously what's convertible in cash or to cash within a 12-month period, differing from non-current assets. Obviously, same thing with current liabilities with respect to what's due in a 12-month period. I look at all of it. I just want to see certain numbers grow or descend on a quarterly. I don't really check quarterly, to be honest, but if on a year-over-year basis, I just want to see the trend up, trend down, up, down, depending on assets or liabilities, but the whole balance sheet. But it's really easy to read a balance sheet. I got to do a video on that.
Absolutely. And Daryl was like, Lightspeed, what happened to them? Ryan, you probably know Lightspeed a little bit better than me. I haven't really dabbled in them at
I've
all.
never owned Lightspeed. All I know is that them as an actual product and service, incredibly clunky. They are about 1,000 times worse than Shopify's worst product. And I've never understood anyone who's actually bought into them. They were overvalued. And what started their massive sell-off, though, was a pretty scathing and aggressive short report that was released on Lightspeed a couple of months ago. And then they literally just fell off of a cliff and nothing recovered it. So they were obviously overvalued too. I mean, look, we've even seen company like Shopify, though, drop 50% or almost 50%, 40% in the last little while. So tech and software is getting hit from the get-go. But it was a pretty scathing short report for Lightspeed that smashed them. Rightly so. I don't like Lightspeed, but
Yeah, exactly. All right, and we got a question from Tara Johnson. I don't recognize your name, Tara. Is this your first time here?
hey, Tara.
HCA, TD says distribution of 1080 per share per year. I say can't be. I got the quote on my TD account. Okay. Okay, so they're saying a distribution of 1080. Okay, so they're looking at that. I assume you're talking about they're saying that that would be their dividend. It's a little high. I'm not 100% sure. Does anybody know what their current dividend is at this moment? I don't have that data in front of me because I think that sounds high to me because I thought it was somewhere around $4 or $5.
For HCA, like ticker symbol HCA.
Oh, wait a minute. I was talking about TD. Sorry. HCA. I do not have a
If
lot
that's
of
a ticker symbol, I'm looking it up right now. Their dividend is 1%. It's $2.24 per share. So maybe I'm not even seeing any news. If this is the ticker, we could be totally misfiring this and have no clue what you're talking about. But I have no idea. Maybe it's just a little glitch with TD.
Yeah, because if it's like $2 now, going up to 10, that
well, there's no news. Like I'm looking at it too. There's no announcement, no press release of anything. The volume's not even out of control. I mean, so
yeah. And if this were true, I'd be buying some. I just saying because that would be an incredible jump. But I haven't seen anything or I haven't heard anything about HCA. So interesting. Okay, let's move on to Fahid. Which stocks don't get hit by interest rate hike? Banks? Oh, well, banks. Well, yeah, banks are going to be making money from an interest rate hike. Now, keep in mind, the back end of the banks, some of the banks do borrow money too, so they're also probably going to equal each other out a little bit. So
I'm thinking like the safest ones that you could go with if you're afraid of interest rate hikes, and especially because our inflation's so high. I mean, the grocery REITs have to be my favorite thing out there right now. Like seriously. I mean, they are so steady. They're so stable. Like you buy Costco, you're good. Yeah, everybody needs it. I mean, the interest rate's not going to affect it. It's those consumer staples stocks, right? That we're going to need regardless of what the interest rate is.
And keep in mind too, Fahid, a lot of sectors like once again, oil and energy is going to be fine. The interest rate's not really going to affect them very much. Bank sector will also be fine. Of course, anything like food, Ryan's absolutely right. People aren't going to stop eating.
I mean, they've been here. They're always there for us. Again, they call them the staples for a reason. But and way down in the bottom, he's saying companies with little debt, good cash flow. Again, consumer staples are all of that. They're just safe. They're blue chips. They're a little bit boring during the good times, but they're really nice during times like this.
Exactly. And Riley also says insurance.
Yes.
So, but that to me, when I say the banking sector, I usually include insurance because it's sort of the financial sector. So I like to pull all of that into that one sector. But yeah, they will definitely do fine. Then Jill asked, how do you determine if a stock is overvalued?
I think this is the thing too, because there's not actually an answer to that question because of how you can look at it, right? So again, you can do quantitative fundamental analysis where we're analyzing the income statement, the balance sheet, cash flow, all of that based on math, right? We do want to see numbers grow. We do want to see if debt's going up, we want to see assets going up, right? At the end of the day, there is the qualitative side where there's that story to tell, right? Like, again, Tesla versus no other stock could have the balance sheet and market cap that Tesla has without the leadership team on the qualitative side. You know what I mean? And then two, like, I don't know, there's people here in the community. I know we all have our one or two stocks that it doesn't matter what happens to that stock. No one can convince us it's a bad idea, right? So it sucks, but the balance sheet, this is why I don't like the income statement as much because I don't know, even for instance, on crypto miners, their income is reported so differently now, and it's not represented, I would say, fairly on an income statement, just because it's now classified as other income. It skews the number. It makes the numbers look skewed. But on a balance sheet, I literally, again, the most simple equation I've ever done, and it's like a pretty good indication. You'll be able to find out if a company's like risky right off the bat. is divide the current or the total assets by total liability. And seriously, anything below 1, then they're obviously anything above 1, they're able to cover their current liabilities, right? And then by a factor of X, whatever. And then anything below 1, you are dealing with risk. So then you have to compare it now to the narrative of the company, the sector itself, what's going on. I mean, if you look, for instance, price to book ratio, I mean, if you bought cannabis, like that one death stock that I bought, it had a price to book of 1-to-1, which would normally seem good. But then you get on the qualitative side and the sector falls off of a cliff and nothing, it doesn't matter if it's a 1-to-1 on the book side, everything's done, right? So there's so many angles. I don't know. What do you think, Candace? I like that question.
Yeah, I think there's definitely a lot of angles. Another thing too, with a lot of times statistic wise, you always want to kind of be comparing apples to apples. Like if you want to know if a company is doing well, compare it to companies in its own sector that are doing well. Compare the numbers that way. If I were to compare somebody in the oil sector to somebody in the banking sector, those numbers aren't going to tell me how they're doing relative to each other in any way, shape, or form.
Well, again, because like each sector's got a different news base that drives itself on every single day. Like the war in Ukraine uniquely affects oil and energy, and not as much the Costco's and consumer staples. Like everything. Yeah, good point.
Oh yeah, absolutely. And Tara mentions, yeah, it's got to be a typo. Yeah, we kind of thought that. And companies with little debt and good cash flow, I think. So yeah, that's one of those big things when you're looking at a company. Here's another thing too. Sometimes you have a company you just love, and Ryan sort of mentioned it, that they can do no harm. But
sometimes, I mean, we all have one, and it's like, and it tends to be those ones that hurt us most because you get emotional on the company. But everyone's got their story of a company that could do no wrong.
yeah, in my case, it's EIT. Even though I did an emergency video on something that I thought was kind of, it was within their rights to do what they did, but I really didn't feel it was something they should have done because it hurt more investors than it helped.
So wait, what did they do? Because that was supposed to be big news. I remember you talking a lot about it.
Yeah. So basically, in a nutshell, they had put out this report, and hold on, I just got to kill another bot. There we go. In a nutshell, they had put out a report saying that they were going to be doing this special distribution. The way the report was worded implied that they were going to be providing stocks up to a value of 44 cents per share to people who were registered and held the stocks by the 31st of December. And everybody was waiting for these stocks. They didn't come. And we were all trying to figure out, well, okay, what's taking so long? Why are they taking so long? Finally, one of my viewers messaged me and said, I just contacted them and they said there's nothing coming. And he started saying, it sounds to me like they just did a buyback. And I was like, well, I don't think that there's no way they would have done a buyback and called it a special distribution. So I reached out to EIT, to their investor relations. And what they told me is they did something called a notional distribution. So what a notional distribution does is the money doesn't go to you. The shares don't go to you. Everything stays the same. But what it does is it actually boosts up your average cost base on the stocks. So people holding it in registered accounts. So for example, your TFSA or your RRSP, you've benefited in no way, even though you may have rushed and bought a whole bunch of extra shares thinking you were going to get a payday.
Wow.
Now, if you held, here's the bad part. If you held it in a non-registered account, yes, your ACW went, or your ACB went up, which means that if you sold it, your capital gain wouldn't be as bad.
Yeah.
Or if you sold it at a loss, you'd get a higher loss, which you could use for tax purposes. But here's the burn. It's completely 100% taxable immediately. You'll get a T3 with it. Yeah.
Bit of a bamboo. Well, like, you know what? Like I said, everyone, stuff happens, guys. This is the stock market. This is business. Stuff happens, but that's unfortunate.
Exactly. And I mean, I still love the share. I'll tell you why. Their EPS is...
Sorry, Candace. So I really hate to do this. I can hear my dog chewing on some sort of wall. Can you give me 15 seconds and I'll be right back?
Yeah.
Okay,
I'll explain why I love EIT. So yeah, I still love them for the simple reason their EPS, uh, their earnings per share is just really good for an income trust. And that to me is great. That's fantastic. It means that they can sustain what they're doing. And what they're doing is giving, well, 10 cents a share in dividends every single month. Their shares right now are just shy of $13. So that's above a 9% yield that you're getting back on these shares. So that to me is, I mean, that's just fantastic. You can really start to build up and beef up some dividends pretty quick on them. Mind you, you still want to diversify. So don't put all of your chickens into EIT. But I think they're a good company. And also keep in mind, I'm not telling you guys to go out and buy EIT. I'm just giving you the information as to why I did. You still want to do your own due diligence. And you want to, of course, talk to your financial advisor before you make any big decisions. Now, what I will also add, though, is banana bread. There was something I wanted to add on EIT. Oh, yes. So I reached back out to EIT and after they gave me the information and I figured out what was going on. And I said, look, you needed to be clearer on what it is you're providing in these special distributions in the line of information, because this stuff actually went out over the major news lines. And so a lot of people did buy in thinking they were getting a payday. So they've got an FAQ now on the site. I don't know how easy it is to get to, but they said that'll be available, especially going forward next time that they do this. Hopefully, they don't choose a notional distribution again. It's interesting. One of my followers, also another viewer of mine, is a financial advisor, and he was like, "Wow, they did a notional. Those aren't done very often, and it's kind of odd to do it." So I'm kind of in shock a little bit about them. All
Stuff
right.
happens, though. I wouldn't worry about it. I mean, and people gotta. I hope you didn't get any stupid comments about that, because again, things happen every day, and there's like no control over that stuff, especially when the company doesn't.
No.
You know what I mean? Like, didn't
Well,
let you
no.
guys.
I
Like,
get
was this a due diligence issue, or did they just not elaborate?
they just didn't they didn't really give any information, and they worded it really, really poorly. So here was my response. The second I found out about it, I'd already made a video for the day on market caps. It was a good little video. And I knew by doing an emergency video just to get that information out to everybody quickly, I knew I was shooting the other video in the foot.
Well,
Because
okay, you know what you got to do to fix. You would have never run into this problem if you use this resource in the future. For anybody watching, okay, if there's ever a special distribution or something you're unclear on, go to cedar.com and read their actual filing. Read their filing. It would say notional distribution right there. I'm certain of it, right? So keep in mind that resource, guys. If you're ever confused, go to Cedar. It will spell out exactly what the filing is. I mean, it's a filing, so. Anyway, it's another resource. But
yeah, absolutely. And I think the reason that I didn't go to it is that the wording that they used made it sound like they were providing shares. It really did.
yeah,
So I didn't have any doubt going into it. Of course I was wrong. So I made that emergency thing, got it out as quickly as I could. It was actually my shortest video ever. It's only a 5-minute video, but interestingly enough, my Christmas live stream on Christmas Day is when I sort of mentioned about that special distribution, because that's when the news had broke about it. So I did mention that, and it sort of became the back theme of that show. And I've just been getting all these hits on my Christmas show. And I'm like, why am I getting all these hits? It's because it's people trying to figure out what's going on with EIT. So now they've got the emergency video that they can come and get that information, because I know a lot of people from the outside, and I've gained viewers of people who've come in just because they're trying to figure out what's going on with EIT. So,
well, I just want everyone to keep in mind, if there's one, cedar.com, seriously, every filing, if there's ever anything confusing, Cedar, done.
yeah, absolutely. Absolutely. So Dan, so SM says, what is generally a good free cash flow ratio?
Wouldn't 1-to-1 be the best?
I would think so. I mean, that's a solid, that they're You know, they're performing well. They're meeting all of their obligations. So I would say that would be.
Yeah, it's not super fantastic. Isn't it just a commonality in the stock market that anything that's 1-to-1 is usually a good thing? Doesn't
Exactly.
matter what the ratio is. It's funny.
All right. So does a notional distribution affect the company's cash flow at all, or does no money actually leave the company? Yes, there's money that leaves the company, because you have to realize that with an income trust, how they function is they don't pay taxes. The reason they don't pay taxes is they give away their profits to us. So in this case here, EIT they had quite a bit of money left over at the end of the year, and they either had to give it away or else they would have to pay taxes. So that's what that money came from. So that money they gave it away, it still goes back into the system. It just doesn't make it into your pocket. That's the way the notional works. So where it actually ends up, honestly, I do not know. Something in the back end where it goes into the brokers and it goes into the system itself, but it's kind of a weird thing, and that's why they're not used very often. Notional distributions are fairly rare.
What is the benefit to this versus what everyone thought would be the distribution? What's the benefit to this?
Here's the thing. If they had just given cash, like just done an extra dividend, it would have cost them no more than what this cost them. It was the manager of the fund who said, I think I'll do a notional distribution. I think that would be the best. So the manager made a poor choice on this, in my opinion. But both for the companies, either way for EIT, both of them result in them getting rid of the money without paying taxes. So
I would assume, though, notional distribution would remove any of the risk that would have been associated with a dump following a one-off dividend. So this would maybe be
nothing changes.
Sorry?
Because nothing else changes. Like with a notional,
that's what I mean. Yeah.
Same number of shares, the same
That's
number.
What I mean. Yeah. So it almost seems like maybe now I'm curious on what their cash flow is at that company, if they're worried about maybe what the market cap is overnight on a sudden dump. I don't know. I don't know enough about it.
No, it's definitely weird. All right. And Jill wants to know, why do you and Rye use DCA?
If I believe in a company, I don't really care what it does in the next 6 months or a year. So it's more.
Exactly. I mean,
it's safer to me. Yeah. I don't know.
Yeah. I mean, DCA, just for anybody who's new, and I know we've got at least one person here, that's your dollar cost average. It basically means if you have a company that you're completely invested in, you know that they're going to do well long term, to not try to, because a lot of times if you're trying to time the market, you're going to mess up all the time. So what this does is it removes that possibility. So you're just saying, I'm going to buy, let's say $10 every single week of this company. So then 1 week you're going to hit it on the high, 1 week you may hit it in the middle, the next week you may hit it on the low. But when you average it all out, you're always in the average. You're always sort of coming through. So you're not winning or losing any extra, other than the fact that, honestly, if you think about it, if a company does really well over 10 years and you've been investing that long, it doesn't really matter where you're buying on that, because you're going to make back a lot of money, provided they do well, of course.
Well, this is a very easy representation relative to stress, even, for instance, okay? Bring up a candlestick chart on whatever stock. It doesn't matter, okay? Bring up a candlestick chart, check out the volatility, compare that to your own stress levels, trying to figure out when to buy in, when not to buy in. Then bring up the 50-day moving average, okay? Or the 200-day, whatever. Nice, smooth little line that follows the trend. That's just a perfect representation of how much easier it is, and it yields borderline the exact same results. So at the end of the day, if you just believe in the stock, DCA is just almost saving your life, really, to me at least. I mean, I couldn't imagine trying to pick a buy point on my stock every single time I wanted to put into it. For instance, like RioCan, I don't care at all what the price of that stock is ever. I'm just going to keep buying RioCan. Simple as that. I get my monthly distribution. Price doesn't matter to me. I'm confident, whatever, right? So for instance, though, DCA, again, you have to really believe in the company, because I would almost never do that with penny stocks because that I would look for an immediate buy-in. But then there is that one penny stock, or no, two, that I've just thrown some change in here or there, keep adding on to it, whatever. But DCA just removes all my stress for me, like entirely.
Yeah, no, absolutely. Now, SM is coming to our rescue, maybe. He says, since it was year end, could it have been that he or she wanted to help people doing tax loss harvesting?
What would be the price in the last quarter for EIT then?
Well, I want to actually answer this right away. I have the answer immediately. The answer is no, and I'll tell you why. Because this distribution was given in January, so it would not count towards last year. So you could not use it for tax loss harvesting. You can use it for tax loss harvesting at the end of this year, but you couldn't do it for 2021 taxes. So you'd have to hold off and do it for your 2022 if you, of course, have it in a non-registered account.
Oh, let's hope it's not foreshadowing what's something for 2022.
Who
Ooh.
knows? But like I said, with these type of accounts, and I will preach this till the cows come home, but these are the perfect things to put into your TFSA. Then you're not worried about any of the taxes, especially REITs and income trusts. Well, a REIT is actually an income trust. Those type of stocks, they're passing the taxes on to you. So you actually, if you keep it in a non-registered account, you're paying a higher tax than you would pay on just a regular common stock that's not an income trust outside of your TFSA. So you want to be putting these in your TFSA.
Or RRSP, whichever.
Yeah, or your RRSP. The only situation where you wouldn't want to be doing that is if obviously your registered accounts are full. If you don't have the space, then okay, sure. We also got Zach now in the house. Hi, Zach Chapman. And Cisco was there, or Ciso. I always want to say Cisco because of Star Trek.
I know.
I knew you'd appreciate that one. Zach says, I'm with you, Rye. Rather spread out my buys than jumping in all at once, especially with all the volatility going on. Cool. SM is, oh yeah, I thought it was in December. My bad. No problem. It was actually Zach. SM, to be very honest, I thought it was a really good hypothesis. I mean, you missed one small point, but the fact that your brain went there, that impressed me a lot. And considering you're still in high school, that's just amazing. Kudos. You get the kudos anyway. Zach, Rye, once you've maxed out all contributions in your TFSA and RRSP, what are your goals to achieve afterwards?
Oh, dude, once I've maxed out my, well, no, I'm only going to a certain limit with my RRSP. I'm going to be probably stopping at 30 grand until I buy a house because I think 35 is the limit to pull out for that. So I'll stop at 30, 35. And then the TFSA, when I get to a fully maxed TFSA account and then that 35 in their RRSP, my problems are entirely different than what they are now. So I have no clue, man, because if I say something now, guarantee it's going to change by that time. So I'm going to focus on getting there first.
Awesome. Killer GB is in the house. Hey, Killer. And another question from Jill. What percentage of investing should be on growth versus blue chip versus speculative / Bitcoin?
Different for everybody. I'll just tell you what my ratio is right now. It's about 65-35. It's come down a little bit, was 60-40. I'd like it to be a lot closer to 75-25. 75 blue, 25, speculative growth stocks, and that includes Bitcoin or whatever. So 25% of my stuff is very high risk. That's what my goal would be because, again, right now it's about 35. 25% would be nice, high risk, high reward, whatever. I can afford to have that level of risk ratio at my age, so I'm good. And then 75%, again, stuff like like Costco or TD Bank or BMO or Rio, whatever, that I just dump money in and I don't even care. So that's where I'm at.
Mm-hmm. All right. This is a fantastic question, Jill. The reason it's fantastic is I have done a 4-part series on investing, and it was called Generational Investing. They're on the channel if you want to look at them. I broke it down by your different generations: boomers, Gen X, millennials, and the Zoomers. In a nutshell, though, the younger you are, the more time you have to recover from bad moves, the more you can be more aggressive. As you get older, you want to start moving away from your riskier stocks to get to more safer blue chip. And then as you start to head towards retirement, your goal should then be looking at passive income, because the big thing
Like
you want,
index funds and stuff. Yeah.
index funds, solid dividends, because once you have retired, a few things are going to happen. First of all, if you've got a lot of this passive income in the form of dividends in your TFSA, then all of that monthly income that you could be getting out of your TFSA from dividends alone isn't going to count against the calculations for your old age security, so your OAS, meaning that you're not going to get as much money clawed back as if you had a job on the side, because they do take calculations into like your OAS. It doesn't really affect your Canada pension. In addition to that, it's just one of these great things that you can really improve your quality of life. If you have saved all of your life and you've moved everything towards passive income in your older years, imagine how nice it would be to be having, $2,000-3,000 a month just rolling in as you've retired. You could live a very high quality of life, and that's kind of the whole gauge of from the beginning to the end, because you want to really build things up. Like somebody like, once again, SM, who's nice and young, he's at the beginning of all of this. Heck, he hasn't even hit the beginning yet, but he kind of is. He has the tools to do this right. And he is going to, by the time he gets up to being, when he's up around in this between 50 and 60 and moving towards retirement, I imagine his passive income when he moves into retirement is going to be absolutely stunning.
Can we go to Fahad's comment for a sec?
Yeah,
This is a good one because I see a lot of YouTube, and I think it's a good question because I think a lot of people misinterpret what they mean by forever stock. Because a lot of people are like, what do you mean a forever stock? Like, I'm never going to sell it. I'm never going to realize my money. Sorry, there's a cop car going by somewhere in case you can hear it. But what I will say about a forever stock, though, keep in mind, I think what a lot of these people aren't doing well at describing is that, so once you build a certain portfolio, let's say you've amassed $1 million in forever stocks, okay? You then don't cash that out. Don't worry about paying tax. You would obviously just loan against your portfolio and pay an interest rate as opposed to a tax rate, right? Now, the only way that's actually possible, though, is by holding quote unquote forever stocks like a Coca-Cola or the banks or some of these insurance utilities, the safe ones that he's mentioning, because you want it to be safe so that your constant source of loan and cheap income is always there. So it's not a forever stock in the sense that you're just, I mean, I don't know how to describe it because it's very different. You're not holding that stock as much for it to grow. You're almost holding that stock so it maintains that foundation that you can kind of always rely on for your constant loans out for income every year. Again, swapping yourself from potentially 40% to 5%, depending on your interest rate, right? So a forever stock for me is something like a Coca-Cola, like that it's not going anywhere for me. And I mean, even banks are, to me, not a forever stock. Even REITs, I don't know, not a forever stock to me, but truly like a Coca-Cola for me is almost a forever stock. But I don't know, Candace, what do you think?
I think when it comes to forever stocks, forever is not a very long time, because
Yeah.
when the conditions change, when the markets change, and I hate to say this because it's going to be sounding like it's coming from Kevin O'Leary, but you need to change with them. So that's the way it should be with stocks. And even with, let's say you have a great forever stock like Coke, and you're starting to move towards retirement. I mentioned where you're trying to look at building your passive income. Well, the Coke dividend's not very big, so you might be able to find a very stable company with a higher dividend. It would make sense at that point to say, okay, Coke, thank you for the long healthy
That's the one thing, though, I think too many
and
people, because you always are hunting dividends, which I don't disagree with. But like, for instance, a dividend over 5% freaks me out. Like a dividend at like Labrador Iron Ore, for instance, LIF, or even EIF. But it freaks me out always just because
Mhm.
the dividends are not usually stable when they're over 5%. Is that not fair? Like
No,
the
that is fair.
stability.
And keep in mind too, at the retirement age, you shouldn't be going after the big dividends. You want to be looking at the highest dividend you can get with stable blue chip companies. So, for example, I would trade Coca-Cola in for, like, if I was retiring today, I would trade Coca-Cola in for perhaps TD Bank or Bank of Nova Scotia, um, or even one of the oil companies that provide some half decent dividends as well. Those are where I would be looking, moving out of like the
Well,
1% type dividends up
again,
to,
though, looking at it like Coca-Cola, again, not that I'm into Coca-Cola, I don't own this stock, up 25% in the last 52 weeks. Last 5 years, doing fantastic. I mean, I don't even think people are thinking about the dividend. To me is a bonus, to be honest, on
yeah.
Coca-Cola.
Well,
I
no,
mean,
it is a bonus, but
and it's 2.76%.
okay,
Whoa.
we're up a little higher than I thought.
Okay. Weird. That's way higher than I thought, actually.
Actually, I thought it was like around 1.5. So
I thought it was like
2.7 may
less
not
than
be
that.
the best example, but it is one of these things when you are getting into retirement. A lot of times with growth stocks, you might be able to grow the stock a little bit over the next 5 years, but you're getting into that time of life where you don't know how many years you have left, and you just want to increase your quality of life. It doesn't matter if you die a billionaire or a millionaire, but that in your retirement years, you just have a comfortable life. You've got the money coming in, and all of that capital that the dividends are coming off of. That's going to be that nest egg to go on to your loved ones and pass on to either your spouse or your kids or things like that. So that is kind of cool. Now, I had another question here. Let's see here. Where was it? Oh, Dave D said he just saw a Wealthsimple ad on CBC. Huh. Holy cow, I just see a Wealthsimple ad right below you. What a coincidence. Oh, sorry, I just found that funny. um, so yeah, Wealthsimple is getting more popular. They are showing up. I see their ads like everywhere. I don't watch regular TV, but I think that's cool that they're showing up there. It shows that investing is becoming a lot more mainstream. Daryl says something makes sense. And you think taking about 60% of my income, putting into the stable coin and earning that DeFi interest is a good strategy during this crypto bear market. I think kind of starting right now. Okay, so I think it's interesting. I don't think we're going, honestly, I don't think we're in a bear market yet. I think people are afraid that we're in a bear market, but I'm charting some things when it comes to crypto that actually are saying kind of the opposite. One thing I've been charting is I have found a giant channel in Bitcoin that's been going on now for a very long time, but it has stayed true to it. If it continues along it, and I'm actually gonna post something this week on. I was gonna actually put this in the newsletter, to be honest. So anyway, if you're interested in that part, there is a link down below to my free newsletter. It's just once a week. It comes out. I give some exclusive content. So usually, sometimes it's TA, sometimes it's the stocks I bought in the week, or sometimes it's just an article that I write exclusively for the newsletter. So it's basically one email a week. All it basically has is my exclusive content, and then it will just tell you what videos came out in the week. So if you missed one, you'd be like, oh, there's that market cap one. I missed that one. How did I miss that one? It's because of that emergency EIT video. That's why you missed it. Then you can click on it. It'll take you right into YouTube, and you can watch that video. So yeah, if you guys want to know more about what I'm charting right now, my next TA is going to drop on the Monday newsletter. So definitely in the about extra information down below, you have got the link to my newsletter. While you're down there too, I'm also looking to put a whole bunch of exclusive content on Patreon. So don't be shy. You can jump in there if you'd like to. Also hit like and subscribe while you're there too on this video, because that helps the channel and it doesn't cost you a thing, which is kind of awesome. Siso, I hope I'm saying, I really don't know if I'm pronouncing Siso's name correctly. I hope I am. Siso, let me know if I'm saying your name right. So Siso, I maxed out my TFSA and well over 250,000 on RRSP. That sounds a little high. Maybe you have an extra zero in there, but I'm not sure. I had to take a different route into life insurance/investment to shelter all taxes when I decided to pull my money. Yeah, a lot of people sometimes do. There's a lot of different ways. that you can get very creative with finances when it comes to taxes. I used to work for a family that had a very big real estate company, and I helped them with their taxes and some of the loopholes that they were going through. I was just like, how can you write this off? Like, for example, they wrote off the dog. They had a dog at home, so they wrote off the dog food, and they're like, our dog protects company assets on our property. I was like, really? Your dog would lick the criminals to death if they came in. But they're very creative. And I guess that's kind of the thing. When you have a lot of money, there's a lot of creative things you can do to keep your money. Um, the goal, though, of this whole community is to try to help you move towards that, not to find loopholes, but to move towards becoming wealthier, becoming a better, richer you. Zach, congrats, Siso. That's amazing. Hopefully, I can get there one day. And that's exactly what I think I just said. Killer GB, yeah, you're using it as a store of value. You can do the same thing with gold stocks. Here's the thing, and I know Ryan agrees with me 100%. Fundamentally, Bitcoin is supposed to be a store of value. It's just not there yet. Not until the volatility has gone away, which requires a lot more investment, a lot more widespread adoption before that can happen. So Bitcoin, I think, potentially can be a store of value. I just don't think it's there yet.
Just reads like a growth stock, I'll tell you. I mean, everything about it, but right now at least.
Absolutely. And I'm still stoked on crypto. I think with crypto though, you honestly, if you really want to be invested in it, you have to find coins that you have a good confident level in, and look at them on a longer term scale.
For me,
Yes.
honestly, like I don't know enough about buying the individual coins, this, that. All I know is I love DeFi. I found my one company. And for me, I'm not leaving. Like, I'm going full blown Leonardo DiCaprio here. Like, I'm not effing leaving, because that's how, when you find that one horse that just is gleaming and you just want to race it home. I don't know. Not that that's ever happened to anyone. I'm just saying, like, that's my diamond in the rough. I'm going to keep going. But with crypto, for instance, people always ask me, what happened with this? What happened with this today? I don't know, man. Look at crypto. Like, I mean, it's down. It is what it is. It's going to be a long venture for sure, I think, with crypto.
No, absolutely. And Killer KG, what about doing that BTS with the dividends the dividends that I watched that video, Rye?
I don't know what you're referencing.
I think he's talking about the interview video, that
Yeah, I
new.
know, but what about doing that beat? I don't know what he's comparing that to.
I think he's saying, I think that BCTS he's talking about is the actual, I think he's just trying to say the name of the ETF.
The stock? Yeah.
Yeah. I think he just wanted to know about the dividends. But more about whether or not that's something you recommend doing. I think that's kind of what he's sort of getting at there. Now from that video, let me correct me if I'm wrong. I thought he said that right now it's not like a monthly, it's more or less he's doing it as a one-time now.
It's a one-off right now.
Yeah. So if you're thinking about like you want to get into dividends, I would wait until it's a regular thing. For me, I don't want to get in and just have it as a one-time off thing, because
I'm not a stockholder in that, by the way, nor was that a sponsored video. That was just a straight up interview. But yeah,
and it's a good interview. Anybody who hasn't caught that interview, definitely there is a link in my about more information down there to the Hi Rye channel. Go over there, check it out. It was a good video. I liked it.
If you're a Bitcoin maxi, you're not going to like it, despite giving a Bitcoin dividend. I'm just going to let you know.
It's a very glitchy app, though, I've noticed. The Wealthsimple.
Well, they've been getting, so what's really great about Wealthsimple? They just are forcing the 2FA, that like secondary verification, onto the Wealthsimple app. That's a precursor to allowing us to transfer outside with our crypto wallets, because I was kind of told that beforehand. They need authentication to be solid before they can even allow transfers out. So it's coming. I'm psyched about it.
Yeah, and I'll tell you, one of the things I really love about Wealthsimple is they're constantly looking to improve, and they've been very consistent with that, with the changes
Well,
they've
you
been
know what I like
making.
about Wealthsimple? No, straight up. This is what I like about Wealthsimple. Okay, the reason why. So Robinhood, okay. Robinhood obviously felt some serious pain with GameStop, right? But if we're going to compare like Robinhood to Wealthsimple, one's American, one's Canadian, but Robinhood has significantly more freedom on their platform. Robinhood is kind of like a simplified version of Quest Trade, whereas Wealthsimple is like a simplified version of Robinhood. You know what I mean? Almost kiddie stuff, but by limiting how much, like for instance, on Robinhood, you can trade margin, which is kind of contributed to that GameStop thing going up in retail traders, right? Whereas in Canada, there's no margin that you have regular access to if you're a retail trader, unless you've got your TD Bank or BMO Investor Line, whatever, right? So for me, I'm thinking Wealthsimple was really smart by taking that slow, casual approach by not giving us certain freedoms, but they're coming. Like options trading will be coming, which will be freaking amazing. Yeah, I'm excited, but Wealthsimple's smart.
Absolutely. Can't say enough about Wealthsimple. I have only one complaint about Wealthsimple, and that is, if you notice my referral code, they gave me an underscore and a dash. I'm like, seriously,
You might even
why?
be able to hustle them for another code. Seriously.
Yeah, I
'Cause
should. My
that
only
code's
problem
bad.
is that I have to go through back and change every single referral code.
True, true, true.
But yeah, that might be something to try to do.
Well,
And
Candace, what I would start doing to make it easier is that when you are doing a live stream, have a pinned comment in the live chat with your code so people can just copy and paste it, have it there the whole
mm,
time and yada yada. But yeah.
that's probably a really good idea. All right. Let me get back here to the comments up here. Okay, and we just did that one, and didn't even know you had a. Oh, I thumbed you that one. All right. I was referring to the blue chip stocks and then borrowing against them. You can do the same thing with gold stocks. It's a store of value.
The only thing I would say with gold, you'd be better off doing it with gold itself, just because gold itself is a very good store of value. But the gold stocks tend, okay, every time there's a beta, we are talking about volatility now outside of physical gold itself, right? I mean, just intense volatility. So it's a little bit riskier doing it that way. But again, the returns are usually better. For instance, if gold were to go up 5%, you're going to see the miners up 15, right? So I get what you're saying, though. Good point.
Yeah, no, I think that makes absolute sense. All right.
And I don't care if people think I'm joking, but you can't tell me that Bitcoin is a store value yet. And that's why, again, me and Candace agree on this. It will be one day. It's just not right now. But yeah, I mean, it's got $1 trillion, or I would say $700 billion market cap now, whatever it is. But I mean, it certainly acts like one.
Oh, absolutely. And here's somebody new. I don't recognize PJ, but PJ Francis, Francisco.
Francisco.
Any of you getting the Wealthsimple metal card? Yes. I actually, as far as I know, and maybe there's more in the community, but I know myself and Corey, luckiest guy alive. He's already got one Bitcoin because he's that dedicated. The two of us were selected as winners to get free metal cards. Like I'm expecting my metal card any day now in the mail, and this will be my first metal card because that'll be one that you kind of drop on purpose just to make the noise, just to make people jealous, you know.
Classic.
So yeah, so definitely. Now, if you are also getting a metal card, PJ, let us know. I don't know when these are going to be available, but when they make them available to everybody, I think it's going to cost $25 to get one.
Are
So
you serious?
I think that's what they said. That's what they said in the
Oh my
announcement.
God. I'll be honest with you guys. I'm okay tapping my phone then. Okay. I'm going to keep tapping my phone. Oh my gosh. $25 for my debit card. Okay.
I know. Well,
Okay.
it's one of them things. I think it's just more of a luxury than
They're
because you'd
getting
have
a
the
little
normal
Elon
card
Musk on
anyway.
us now. Now he's starting to create $800. Next thing you know, there's going to be a Wealthsimple bottle of tequila for $1,200. There's going to be a Wealthsimple belt buckle for 3 Bitcoin. It's only the beginning.
It's happening. It's happening, folks. That's actually funny. Yikes, I'm scared for when options come. Hope I don't lose too much. Here's this thing. Don't if they roll out options, um, That doesn't mean you have to use them.
Yeah, dude, let's put it this way. I've been trading and having fun with options for 10 months now. Still have yet to make one goddamn video because I'm way above 50-50, but I'm not even close to 70 yet. Like I'm at a point where I don't even know. I'm still learning my own tricks. I'm still, because people think, I mean, look, you can buy a call or you can buy a put, but then you can sell a call and sell a put. Two intensely different things. Some pay premiums, bro. I would watch 50,000 hours of content before you risk any real money on it. Options are a really easy way to lose every damn penny you made, dude.
Yeah,
Straight up.
absolutely. So that's one of those things. And if you absolutely want to get involved in options, try to find some place where they'll let you. Sure. Try to find some place where they'll let you do it, not with real money, but sort of like a simulator where you're playing the real market to get a feel for it before you even think about throwing your money. And also be prepared to, if you start doing option trading, you're going to lose in the beginning. You're going to lose regularly. So you want to also make sure you're not betting the farm, because if you do bet the farm, you're in that situation where it's just not going to end well for you. And that's kind of not the goal of the community. We want you guys to succeed. And, because I mean, heck, if you guys lose the farm, then you lose the internet, then you can't watch my show. And I'd be sad. I'd miss each and every one of you if that happened to you. Now, Zach, hey, Rye, Candace, over the last year, where do you think you've most improved spending money in your day-to-day life, taking spending that and investing it instead? That's a wonderful question, Zach. I'll give my answer, and then when Rye gets back, he can give his. I used to be bad at spending, honestly. When I'd have extra money, I'd spend it on friends. I was really generous with my money, because it was one of those things. And if I didn't spend it on friends, I would just buy crazy things. I remember when there was the war between HD DVDs and beta. We're going way back. HD DVDs and Blu-rays. And I didn't know who was going to win. So I just went out and bought this incredibly expensive player that did both. So I used to spend money very irresponsibly. Now, when I moved into investing, luckily before I moved into investing, I had a roommate who was just insanely good at saving. And it was like her bank account was just absolutely like it was on steroids at all times. And I was like, oh my God. And I learned a lot about her, about how she did it. And so I started to employ that even before I really started investing, starting to sort of look at what I was spending and sort of asking myself this question: can I really afford that? A lot of times I would even say to myself, if I was making a bigger purchase, if I can only just afford it, I probably can't actually afford it, because because you're kind of shorting the rest of your life at that point. So I started looking at little things like that, and little things that, like, for example, fast food. Like, and you go out to fast food and you spend $10 on a small little meal when you could have made the same thing for, even a third of the price at home. Same idea.
I don't know about these. That's the scary thing about these days, though, with inflation. You know what I mean? You want to make a friggin' a smoked meat sandwich? It's going to cost you $10 at the grocery store. It will.
Yeah.
It's crazy.
And pretty soon, though, those inflation prices are going to be hitting the fast food too.
Yeah.
But in a
You're
nutshell,
already hitting
for
it a bit.
Ryan to give his answer to this question, once I got into investing, then when I had that spare money, instead of even being tempted by anything else, it was just like, ooh, I can put this into my TFSA, or I can, watch and start charting. One of the things I love to do was just chart how many dividends I had flowing, and how many stocks I had, and how they were growing, and watching their growth, and looking for little ways that I could tinker a bit to just improve the performance of my portfolio. So that sort of took over wanting to go out and buy stupid things that really didn't matter. All right, Rye, I'm gonna let you answer this one now.
Biggest change would be how I look at debt, in that I don't have debt. So that would be how I change spending. For instance, paid off my truck, credit card, prepaid insurance, you name it. I just don't want I don't want a single bill. So now when I do spend money, it's almost entirely on a cash basis. And then when I spend credit, I just look at it differently. So I would say that I am maybe a little bit like, I mean, I'm one of those guys that I really don't stinge on food. Like I spend more than the average person on food. It is what it is. And that's kind of my treat. But at least for bigger purchases, like for debt load stuff I'd put on a credit card, I just look at it entirely different. For me, I used to look at a credit card the same as a debit card. It's just available cash flow within the month and yada, yada. But now I'm entirely cash, and it is about, I mean, I've got the credit available. It's just, I love living cash. So I guess that's helped me save a bit, quite a bit.
Awesome. And Ciso99 says, Rye, what is your take? How long do we have in volatility for?
Nobody can actually give that answer, but we are coming up onto midterms right now in the United States. You would think that volatility might chill out if we get some, well, no, actually, no. We've got stuff happening all across the world. We've got intense inflation. We have interest rates which are not being acted upon, and midterms in the United States. I mean, 2022 could be a really fun year to watch. So I don't know how long it can last for, dude. No clue.
Oh, wow. SM, what are the metal cards? I didn't hear about them. Basically, they're just a debit card that's made out of some kind of metal. I don't know if it's titanium. I have no clue what it's made of. It's just metal. They're just they're sort of like badges of honor. Some people really, really like them, and they think they impress people. I just wanted one because I've never had one before. And the fact that I got it for free, that's even a bonus.
I've never even taken my plastic card out of its packaging. I'll be totally honest. I'm just one of those guys, though. I tap my Shake Pay, which is linked in the friggin' description down below if you guys want free Satoshis. And I tap my Wealthsimple on weekends all day, every day.
That's a good idea since I used a SIM before stocks. Absolutely. That's exactly
100%.
what I'm, play with a SIM and become comfortable before you start risking your own money. And Christine, I went to KFC today, and for two of us, it was $30 for 2 meals. Holy banana bread. That's
honestly, KFC is expensive as it is. But yeah, that's not big. Dirty bird.
Thank you, Christine. I was looking for an opportunity to get a banana bread in there somewhere. Daryl, I got sober and it saved me a ton. Absolutely. Good job, Daryl. Congrats, Daryl. Yeah, absolutely. That's just fantastic. Give me a second here. I am blocking a bot. Killer GB. I find it funny people relate investing in stocks to gambling. Yes, it's true. You can win and lose big money in both of them, but it's the time factor that's different. Stocks you win, gambling you lose. I would agree with that. Gambling, the thing about gambling is that it's all 100% chance. The thing about stocks is if you do your due diligence, the odds are more stacked in your favor than not. And that's kind of what the whole theme of the show was. Now, guys, we are running out of time on this show. So let's just say 15 minutes, get all your questions in here, and we'll do our best to answer them all for you.
By the way, 28 people here, so do me the solid. Smash that like button while my mouth is running. It takes 1 second. Move it over, smash that like button, and subscribe if you're not already there.
Absolutely. Definitely subscribe. I'm in a race with my good buddy Nate Palmetier. I think he's got about 4 subs on me right now. You guys may be able to push me over the top. And then that'll inspire Nate, which would be great. I'd love to have a really good run with
In all fairness, I will say this because me and Candace kind of went broad strokes on this tonight. And it's tough for me to get into technical or fundamental analysis because, one, I'm not a big technical analysis guy at all. I'm almost entirely fundamental. And then on that, though, I'm not a quantitative guy. You know what I mean? Outside of the two I look at, cash flow, balance sheet, cool, and then immediately on qualitative stuff, right? So it's Nate, I feel like, would have a lot of information on the quantitative aspect of it. I think he's a gem.
Oh, absolutely. And even though I'm in a competition with him, I will still tell you guys, if you haven't subscribed to Nate, go over there and do it. He is awesome.
True diamond in the rough, like truly.
Absolutely. Keto, got the plastic one, plus on my phone. Absolutely. I mean, you don't really need a card nowadays. You can have your phone, or even if you've got a smartwatch, you can use it
I
on your
know.
watch.
I mean, half the time too, just bleep and
Yeah,
just tap it, go, move on.
absolutely. And what's funny, and I think it happened last week on my one of my streams. I was just talking along, and all of a sudden, my watch just started asking me, started repeating what I said. What do you mean? But I was just like, what? It's like, shut up, Siri. So I've got to be careful with her word, because sometimes she will jump in. Nice, Gary, killing two birds with one stone.
I
Christine,
didn't even see Gary's comment. What did Gary say?
it's not there.
Very
So
weird.
I
All
do
right.
not know. I don't see it. Gary, we'll just assume you said something really cool
Okay.
that involved birds. Uh, Christine, gambling is fun to do sometimes, though. Gambling can be fun. I mean, the reason it's fun, though, is because it releases neurotransmitters that, kind of stimulate some pleasure parts of the brain. It's one of the reasons that people get addicted to it.
Well, the oxygen environment helps.
Yeah, yeah. And if you've ever been to a casino, they will play every game in the book to make you make bad decisions. Everything from the sounds, the lighting, um, a lot of times, especially in the US, where they start giving you alcohol, they
They do
want
that,
you.
and yeah.
Yeah, they want you to make the bad decisions. They want you to bet away the house. So it is true. So, guys, you got about 10 minutes left. If you guys got any final things that you want to get in here. Now, after my show tonight, I believe it's a given that the friggin' Oracle will be doing his Saturday night after show. So that was pretty good. Last night was fun. That's all I'm going to say about that.
I
Chew.
don't remember it.
That's how fun it was.
There we go.
The carpet. Hot tub time machine. I mentioned that last week, and I've heard it more times than I can think
I'm
about.
not even a super fan of the movie. I don't even know who started that joke. It was probably Ken. I don't know. Someone said hot tub time
Actually,
machine.
no, it was accident. It was me. Because when I said that we would talk about whatever they voted for, I said, of course, if they voted for hot tub time machine, then we probably wouldn't be talking about that tonight. Though ironically, we now are talking about the hot tub time machine, which is funny. But that was that was me. That was entirely my fault. And Christine did not like that movie.
It was let's put it this way. I'm not sure my mother was in the demographic. Let's just put it that way. The demo was very tied to Tropic Thunder's demo.
It was. And it's to me, it was also one of those things that if you're a full sci-fi fan and that's what you were looking for, you're going in looking for a traditional sci-fi type time travel movie, then that was not the movie for you.
This was a comedy.
It was
an
absolutely
80s comedy. Yeah.
And I call them a stoner comedy, really. So
It's kind of like that, yeah.
yeah. And then Jill wants to know, which people do you follow, respect their opinions about stocks? I'm going to assume that J is a K.
No, let's not assume it. Let's assume where she's saying something. Let's look it up. No, I'm kidding. Okay, for my two people, I'll go flat out, even though he annoys me half the time. The other half the time, I really love him. Obviously, meet Kevin. But the serious guy that I love watching, he's kind of low key. If you check out his channel, I believe it's called Rebel Capitalist. But George Gammon, serious rock star out of the United States. Also, Ross Gerber from Gerber Kawasaki. That's another rock star. He's all over the place on YouTube. He talks more like me. So if you get offended easily on like swears and stuff, maybe not on Ross, but George Gammon is probably like my favorite guy for just straight, no BS talk. That's my favorite guy. And the reason, again, because I don't like, for me, my personal stuff is to avoid the guys who do charting and who do just deep fundamental cash flow analysis and this and this. The George Gammon is the qualitative guy. For instance, he's just more or less the commentator, bigger picture. But anyway, that's my guy.
Yeah, and I'm going to go to the crypto side since Rye did some stock side for you. A couple of people that I do respect. One of them is Oh, there's different people for different reasons.
It's tough on crypto. You
It
got
really
to
is.
admit,
It
because
really
nobody's
is.
right.
Um, Crypto Casey, if you've ever watched her, she's very to the point. Her analysis is very sound when she does some. To the analysis is sound, but Bitcoin doesn't always follow the analysis. Let's just say it that way. And she doesn't sort of glamorize and try to go a little bit crazy with what she's doing. On the other end of the spectrum, if you were to look at somebody like MM Crypto, he is amusing to watch, but he dramatizes things way too bad. A lot of times his charts are not bad. I've seen him, pull in some of the same charts I'm using, so I'm just like, oh, okay, cool. At least other people are seeing what I'm seeing. But a lot of times his interpretations I don't 100% agree with. I would say that those are just sort of two ends of the same candle. But yeah, I mean, there's just, to me, I always look at it this way. Most of my time, honestly, is spent in this community. And, I think there's enough content creators within our community that takes up a lot of my time. And I absolutely respect all of our internal people because, even if it's, whether it's Rye or maybe it's the Danters or maybe it's Nate, or maybe it's the Oracle, or sometimes it's you guys. Sometimes you guys will throw something up in one of the YouTube rooms, and I'll look at it and I'll be like, "Oh, I haven't heard of that before. I'm gonna go do some research." So you guys, I think, all have, especially now, because a lot of you have been here for almost a year, if not a full year, and you're all growing as the communities are growing. So I absolutely respect everything you guys have to say, and I enjoy looking at what you guys are throwing in chat. Sometimes I'm learning from you guys. You guys are learning from me. I'm learning from Rise learning from me. Rise learning from you guys. Occasionally, we're both learning from the Danters. It just it's almost like a nice little cycle, and I think that we're all feeding and enriching our entire journey together. So we got about 5 minutes left, guys. Scuba Steve, okay. Candace, I know I asked you about Crypto. What do you think of BitBoy? BitBoy,
Depends who you ask on that one.
I don't want to slam him on my channel, but in the back of my mind, I am, if that makes any sense.
Well, you just did by saying that.
Yeah,
I don't want to slam him, but
he's just one of these people that he comes off like he's trying to sell a product, and a lot of time the product he's trying to sell doesn't hold a lot of value. He has been accused of pumping and dumping in the past. I'm not accusing him of anything. I'm just saying that I question his motives a lot of times, and if I question somebody's motives, I'm not very inspired by them, if that makes sense. Another rock star is Daniel Pronk. Not sure if any of you have heard. I've never heard of Daniel Pronk, but I'll check him out. Because like I said, we can all learn from each other. And even though SM's our youngest, sometimes from the mouth of babes comes the wisdom of the ancients. I think that's a saying. If it's not, it should be. I just made it. Except he does a lot with American stocks. Well, here's the thing, though. Stocks, Canada is not an island. And you guys know this by now. What happens in the US, it affects us much more in that direction. A lot of times what happens in Canada doesn't affect the US as much.
Or at all.
Literally. But yeah, absolutely. And the US is one of the biggest markets in the world. So knowing about the US and dabbling into the American market is not a bad thing at all, just to put that out there. My crypto guy, Lark Davis. Yeah, Lark Davis is good. I do like Lark Davis. He broadcasts out of, I think it's New Zealand. But he's got a really good demeanor, and his content is pretty good. So yeah, I will give you that, Ciso. Just about a year. All right, let's see here. I just watched Andre. Yeah, he's amusing.
You know what I like about Andre? He doesn't take himself too seriously, but there's usually there's enough content in his video that I almost never regret watching Andre.
Yeah. I
for
wish
me at least.
SM would come on. You know what, SM? If your parents were okay with it and you wanted to be my guest some night, you let me know. I'll make it happen. I totally would love that. I imagine the whole community would love to see you, but you're young. You need to get your parents' permission before we'd even think about something like that, but not a bad idea. And I can respect that. All right, guys. So we're pretty much at the end. It has been a fantastic show. I want to thank you guys all for showing up here because you guys are the real rock stars. And of course, a huge thank you to Hi Rye for spending the night with us. And next week we'll do it all again. Before we go, what do you got coming up this week on your shows, Ryan?
News changes every single day. There's a lot going on. It's probably best that I watch my channel, guys. Let's see. How about that? Watch my channel. Outside of the Monday to Friday live streams, videos can, I mean, I don't know how many times there's probably been since I started. Actually, no, let's just say in the last 2 months, just with how crazy it's been. In the last 2 months, there's probably been 10 videos I've made where the news changes by the time I'm trying to post it, and I've had to scrap the whole video. So it's like, forget it. Now I don't even want to talk about it. Whatever is the topic of the week. There's a lot of stuff, though, with what's going on. I'm not going to get into it. You guys know what's driving the economies right now. So lots. We'll get into it.
Absolutely. And then coming up this week, I've got my 2 videos as normal. Banking and financial industry will be Monday. Tomorrow night as well. Your last live stream, right? On Sunday night? Or
sorry, guys. I just had a little yawn. No, it's going to be the last Sunday for the foreseeable future. Not Sundays are done forever type of thing, but it's going to be the last Sunday for the foreseeable future. So we're going to hit it off, make it an absolute freaking banger, and rock and roll from there.
Well, I'll be there with that for that, guys. Also, Crypto Night in Canada, I will be on there as well on Wednesday, another video on Thursday, and we'll be back here next Saturday to do the same thing over again. So once again, guys, thank you for being here. It's a fantastic show. I love all of you, and I can't wait to see you all succeed in the future. Take care, everybody.